Hey guys, this is a market update. A huge move is coming for Bitcoin imminently, according to this data. We're going to look at this from Glassnode, showing how volatility is compressing a lot and usually get a big move after that. And then I'm going to look at some economic data right here, which is, looking really scary, to be honest. And that's important because of the policy response that's going to come from the Fed, because Bitcoin is essentially a mirror of what central banks are doing, right? Especially the Fed. So we're going to look at that in this video. Firstly, when it comes to Bitcoin, I've said this for a few weeks now, this price action is incredibly dull. I know everyone's looking for a trend, but I just think this is more of a consolidation here. We've had a huge move up from the bottom. This pattern right here, this descending triangle, usually is considered a bearish pattern. So as you can see, sellers are just coming in and forcing the price lower in a trend down. Once you get to this point, at some point you do need a resolution of that, usually, to the downside. It would be played as a bearish pattern by traders anyway. Usually this would be coming in from a downtrend. You get this pattern and then a continuation, but we've not had that. This is an uptrend, right? And so I believe this is more of a consolidation from, what's happened up here where we got that really big move to the upside. And of course, all of those fears about the Fed or the Treasury potentially filling back their coffers by issuing loads of debt, sucking liquidity out of the market, that puts fear into Bitcoin right here. But I think this is more of a consolidation rather than some massive, trend that's going to break to the downside. We're going to look at the economic data, which could force that. But with Bitcoin, it's about the policy response. So really important. If you're a trader though, deposit bonus on Bybit, link in the description down there, $30,000 if you make a deposit, you can go ahead and trade. So check that link down in the description. This data from Glassnode shows us how Bitcoin is really just sitting where it is. I do think this is kind of more of an equilibrium price right here. And you can see this in the data. So what we've seen is this volatility really come down to range lows, right? So the 27th of May, as you can see here, 30-day volatility, very, very low. And you usually get a spike up. Now, in Bitcoin's history, most of that is to the upside during bull markets. And then you get the volatility coming down, which is more of a consolidation before another up move. Now, this isn't going to be done on technicals, but really, I believe these moves are going to come where policy response is important, because what's happening in the economy right now is a huge slowdown. And that's not bullish for Bitcoin, but the policy response, once that gets out of hand, which is almost certain, is important for Bitcoin. So whilst we can look at technicals, I think the news flow is more important to look at, which I want to go through in this video. On the bullish side, I know a lot of people are seeing this pattern potentially as a cup and handle pattern right here. Excuse me for drawing it by hand, but we have the cup, we have the handle here. Now on the bullish side, what you do is take this height of the pattern, and then you take that from a potential breakout of that pattern. And so, 45,000, that's very outlandish. I don't expect this to happen at all. But people are seeing that now. I actually think that the next move for BTC, medium term is to the upside because of a policy response. In the short term, it may get heavy because of what's really happening in the economy, and that's just not bullish for markets in general. What isn't bullish is the fact that all of the stock market outperformance this year has been with 5 stocks. This is a trading narrative because of AI. All of the liquidity and the speculation in the market is getting sucked out into these major stocks in the States and nothing else. These 5 stocks, now Nvidia is a $1 trillion market cap, Nvidia, Amazon, Alphabet, which is Google, Microsoft, and Apple. These 5 stocks are responsible for the entire outperformance of the stock market this year. The rest of the S&P 500, 495 stocks, are basically 0% growth this year. So that's showing you that the real economy is really not doing well. There's no growth, and that obviously feeds through to what's going to be happening with jobs, what's going to be happening with inflation, and does the Fed therefore have to step in at some point? They're not going to do it yet, because it's not that part of the cycle, but it's important to see this data. We can see here as well, house prices looking very weak. You can see right here that in February, US home prices, according to the Case-Shiller Composite Index, continued their decline. There is another index that showed a potential rise there. So I guess, there's lots of different data points. As you can see here, year-over-year change, again, the slowest growth in years, and the rate of travel is very clear. These data points are significant because they are markers of a large slowdown in the economy. the stock market is not performing. It's literally 0% growth in stock prices this year so far, except for the AI trade. And so you have to think the wider economy is just not doing well. Where is the inflation coming over the next 6 to 12 months? And the important thing for BTC is, at what point will a policy response come from the Fed to change what they've been doing? Because that is what is going to drive Bitcoin higher. Everything else in the meantime is just irrelevant and, chasing very small moves as traders. Actually, expectations for another rate hike at the next Fed meeting are growing. And that's insane to me, but that's because there's 2 data points that haven't broken yet. And they're the 2 most important data points for the Fed. The first one is core PCE, which is really what they're looking at for that 2% target. And this is still relatively high and is very sticky. This is a sticky indicator, and so it takes much longer to get pushed around. But this is still fairly high, and the Fed really aren't going to change their rhetoric until this starts coming down. Core PCE. And as we can see here, this is initial jobless claims. The Fed are not going to change track until this starts ticking significantly higher. They have 2 remits. First is price stability, so 2% inflation. The other is full employment. And they have full employment, and that means that their job essentially is to slow the economy and increase unemployment right now. And they haven't been successful at that, and so they will keep going. And so in the meantime, what you're going to see is, Bitcoin trading around, but that is not the big move we're after. What we're after, the really big move, is when the Fed has to step in because things are getting out of control to the downside. I believe that's almost certain, and that is the real trade that traders have to be in right now, which is going to play out over the next maybe 12 to 18 months. For the Fed to pause and cut, there has to be something really significant that forces their hand. And right now, that small banking crisis was dealt with. But the next thing to come, and it always does come, is liquidity. Where is that going? If the Treasury actually tries to refill their coffers, so they issue debt and they use that debt and that income to refill the Treasury general account, which has just happened because of the debt ceiling. As you can see here from Macro Alpha, that does actually create a reduction in bank reserves. Now, why that's important is because bank reserves are dwindling, and that's liquidity crisis in banks could therefore make the Fed step in again and potentially the Treasury step in again. So that's something to watch out for. For right now, it seems like that small banking crisis has been averted, but there are many more potentials in the future as interest rates remain high, right? And so something has to break, and then when it does break, then the Fed are going to change. But until it does, they're not going to. So this is potential. And as you can see here, deposits in commercial banks are in the deepest contraction ever. So again, you're just looking for a potential blow up somewhere, something to happen. But the core PCE and unemployment, still too high for inflation and still too low for unemployment for the Fed to really do anything right now. But you're just waiting for something to occur because interest rates this high, and with an economy that's definitely slowing down, something has to give soon. And that's really where Bitcoin is going to shine, not when that happens, but the policy response afterwards. What I mean by that as well is when the scare occurs, it's not bullish for markets, especially Bitcoin. When we had that banking crisis scare, this is what happened to BTC. It actually went down from that 25 level all the way down to 20. So that's a big drop in BTC during that crisis. However, the policy response came, right? Those banks got tied up or whatever, what happened, and then you got this move. So that could happen on a much larger scale if something large happens, some blow up, unemployment starts ticking up, commercial real estate, something happens, right? There's going to be a blow up that could be bearish short term for prices. A scare happens, but the policy response is important because as we've seen with BTC, when the policy response comes, that's debasement of currency, and that's where BTC shines. So have some in your portfolio just for those times anyway. If you are a trader short term, look at the Bybit deposit bonus down in the description. Check out the Crypto Investor course as well. 300 videos there from start to finish about putting a portfolio together and trading crypto. Link down in the description. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.